Hello and welcome to CMC Markets Trading Outlook for the week of November the 23rd, 2015. My name is Colin Szyzinski, Chief Market Strategist. This week we're going to do something a little bit different. Instead of looking at economic news, we're going to look more at corporate news. This is a holiday week in the United States. It's the big Thanksgiving holiday, which means that all of the news is really compressed into the first half of the week. On Friday, however, we get Black Friday, the busiest shopping day of the year, could have a big impact on consumer spending and retail trends throughout the year. So I'm going to take a look today mainly at how stocks have been impacted in the retail sector into this year and what the outlook looks like for Black Friday. I've also seen something interesting with regards to the film and entertainment sector, which we'll also get to as well. So just to start off, the basic flow of this week is that things are pretty quiet for news on Monday. Monday night and Tuesday we get flash purchasing managers reports as well as US GDP plus GDP for Germany and Singapore. Wednesday is a big day for the US in terms of news. Durable goods, personal income, flash service PMI, consumer sentiment, new home sales. Everything for the U.S. gets compressed into about 3 days. Crude oil inventories as well, and it's mostly into Tuesday and Wednesday. After about noon on Wednesday U.S. time, things will start to quiet down as people head home for the holidays. Thursday is football turkey and some anecdotal reports on sales from the stores that open on Thursday evening. Then Friday's Black Friday, we'll get a good idea of what's going on with consumer spending. And then Monday the 30th, Cyber Monday, a big day for online sales. So I'm going to take a look here at the charts and see what stocks are telling us about the outlook for merchandisers this year. And this chart in particular here, it pretty much says it all. So we're looking at Walmart. Walmart has actually been trending lower through much of the year on soft consumer spending. This big candle down here was the day that they put out a profit warning for next year, and the stock has been punished accordingly. But it hasn't just been a Walmart story. It's Macy's as well. Macy's had been tracking higher through much of the year, but since July, trending lower. They missed on earnings. They've been cutting guidance. They're looking at negative same-store sales for this year's holiday selling season. What's been happening, though, with another theme in U.S. retailing is not just that spending is weak, but on the other hand, that online trading is eating the lunch of bricks and mortar retailing. We're still seeing a huge shift in that, and we saw it in terms of hiring. That Amazon is hiring another 25,000 workers this year, while other companies are flat to lower, and we're seeing it in the stock price. Look at this green line here. Amazon totally crushing all the other big retailers here. Interestingly enough, when we cross the pond and look at the United Kingdom, things are a little different. In the UK, retail sales has been holding up fairly well this year, and when we look at Marks and Spencer stock, and then here in the purple line, even though it's backed off a little bit, it's done pretty well and overall outperformed relative to the major US bricks and mortar retailers. So we may see a little bit less of a focus on Black Friday in the UK, where where retailers have been doing reasonably well. There's not quite as pressure on them to really move product and get people through the doors. Another thing we'll be watching for this year is how much of our focus is on Black Friday as a single day, and how much retailers are looking to spread it out throughout by having sales throughout the holiday season. So we'll be keeping an eye on that over the next few days. The other interesting thing I wanted to mention is when I talk about online shopping, it's primarily an Amazon phenomenon, and I'll show you what I mean, and that's here when we look at Amazon against other online shopping companies. So Amazon, spectacular results this year, more than doubled over the course of the year. But when we look at other retailers, eBay hasn't been doing so well. And when we look at China, China was interesting. Recently, they had a holiday called Singles Day, and it's a big day for online selling. And JD.com, Alibaba, they hit last year's totals by noon, and they put up huge numbers this year. So certainly we're seeing it in their sales. We haven't seen it quite so much in their stocks. Alibaba has been kind of weak throughout the year. I still think this is an unwinding of the hype and hoopla from the company's IPO. JD.com has fared a little better. It's up about 15% on the year. Not as much as Amazon, but it's doing okay. And so that's important to know, and that's something we'll be watching for as well, is that expectations on Amazon are huge. Can Amazon deliver? And if it doesn't deliver, what happens to its stock when it's outperformed everybody else by a country mile? That's something that could be very significant as we move through the next couple of weeks. The other thing I wanted to talk about, and it was something that I found interesting when I was doing my research for this, was that I'm going to bring up here. Cineplex, which I'm having a little bit of trouble with this chart now. Here we go. Oops. Something that I found really interesting with Cineplex, because I decided I'd compare it with other retailers, is we're starting to see some anticipation getting built into stock prices of film companies as we head into the holiday season. There's a number of big releases. We've already seen huge numbers be put up by Spectre, and The Martian did very well in October. As I'm here today, the Hunger Games is coming out today, and in less than a month from today, we have Star Wars, which I just saw a report is already done 50 million in advanced ticket sales, so that's looking to be quite huge. So what's interesting here is when we look companies that could benefit it, Disney, IMAX in particular, and Cineplex. Cineplex is theater chain, IMAX big screen, and Disney the company that's producing Star Wars. Look at this. Over the last month, stocks are picking up. Cineplex picking up, Disney's picking up, and look at the huge rebound in IMAX since August. Just all of them are picking up. What's interesting is Lionsgate, which is the maker of the Hunger Games, had been trending higher through much of this year on anticipation of that big release. But look at this, in the last couple of weeks, it's actually been dropping back off. And that makes me want to watch for as we go into December. Could we be into this buy on rumors, sell on news scenario where we get stocks pricing in big box office and then potentially weakening once the films actually come out? So it's something that we want to keep an eye on there. In the case of Disney, as we look at the blue line, Star Wars is their second big release in the year. The Avengers was the first. Back in the spring when they released the Avengers, Disney stock continued to do quite well. It wasn't until the summer when they started to run into issues on the cable side with Netflix pounding on the crushing some of the cable stocks and earnings that we saw Disney take this big summer tumble here. But so it is possible it could continue, but we're already seeing quite a bit of anticipation getting built into the stocks. This could continue over the next few weeks as the deadline approaches and as the hype machine continues to build towards that. So those are a couple of the main things I did want to cover off for this week. I'm also just going to take a quick look at a couple of indices before we move on here, and we'll look here. We're still in this divergence phase. We've got ECB President Draghi coming out saying, "I'm going to do whatever it takes to fight off deflation and get inflation going again," and we've got the Fed heading towards an interest rate increase. So, and in this case, so what we've seen though, the Fed this week, we're getting people are still viewing this as a positive. New York Fed President Dudley, one of the key members of the Fed, said the street should recognize that, and people should recognize that an interest rate hike is a show of confidence, and we're seeing that in the stock market over the last few days, with between the Fed minutes and more hawkish and economically bullish commentary out of the Fed this week. The U.S. market has started to turn back higher once again. Now, interestingly enough, we're also seeing gains in European indices. I'll just bring up the DAX here. And on the DAX side, though, we're seeing a much more dovish central bank, where, as I said, we've got ECB President Draghi talking about, he was talking about negative interest rates supporting QE, and look at this, it's starting to break out as well. So it depends on where you are. In areas with weak economies, stimulus could still be supportive, but in countries with strong economies, more stimulus does raise the question of, well, why aren't you starting to tighten? So in this particular case, we could see markets go in different directions. The last thing I'll do is a quick follow-up to last week. Last week's video and my comments on the gold price. The gold had become quite depressed, and now we're seeing it start to level off here in the 1070 to 1100 range around this 1086 Fibonacci level. Very oversold RSI, and it's starting to bounce back up. Suggests we could be getting a stabilization and some base building. The U.S. dollar has been incredibly extended. U.S. dollar index got to 100 and started to have trouble. I think the first increase has now been pretty much fully priced in, but we will probably see a slower path of further rate hikes than what the street is anticipating. Because of that, we could be reaching a limit for the U.S. dollar and a lower limit for gold. However, the thing is, for gold, over the long, I can't rule out a retest of the 1,000 round number because it's been drawn so closely to it. But at least for this week, I think gold will probably start to stabilize in this 1070 to 1100 range. So that wraps it up for me. It looks like another busy week for trading.